Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much, as always, for tuning in. A quick look at what the market is doing as of now. We're seeing that the Nifty has recovered a bit from the day's lowest point. So yes, as of now, trading with cuts of almost 0.6%, some bit of a decline that we've seen in the last few minutes, but still off the day's lowest point is as of now what the Nifty is holding on to, just around the 22,400 mark. So keep an eye out on that. Let's look at the Nifty Bank and what's that doing in today's trading session as well. It was down almost 0.6% when I last checked. As of now, also almost those levels of the day's lowest point. Top sectoral gainers, we do have the FMCG and the auto pack that is managing to hold on to good gains. So both these are the top sectoral gainers, while in terms of losers, we do have the IT as well as the banking side. PSU banks specifically are seeing some bit of a pressure specifically in today's trading session. Do not forget pharma, that also sees cuts of more than 1% in this today's trading session, waiting out for more clarity in terms of Trump tariff, and where that is headed as well is something that we'll keep a close eye on. As of now, Nifty Pharma also down 1.6% in today's day. Yes, that's how the market setup is looking like as of now. But this is a show where we solve all your stock-related queries, and that is what we'll be doing. So today, our experts are Astha Jain, Research Analyst at Securities, and Somil Mehta, Head of Alternate Research at Capital Market Strategy, to solve all those doubts that you have sent us. Somil, Astha, good afternoon, and thank you so much for joining us, as always, on Your Stocks. We'll get started with the queries for today, right? And this first query we have is coming in on Titan. Rishabh Nair is writing to us from Kerala. They're holding 30 shares of Titan. This is at a price of 2,700 rupees. So they're making a profit on this one. The stock is at around 3,180 rupees per share as of now. Wants to know whether he should continue to hold this, sell, or book his profits. Astha, first, let me take this to you, because we did have those updates that came in from Titan as well. Quarterly updates doesn't seem bad, right? They were saying about growth being supported by the surge in gold prices. So where are we seeing Titan headed from here on, and what should the viewer do?
Hi, good afternoon to all of you. See, talking about this counter, I think one should remain invested in this stock with a price target at the immediate level to be 3250 to 3300. Now, talking about the fundamentals of the counter, yes, business updates are looking very promising, and in fact, management has maintained its EBIT guidance in their con call after the Q3 FY25 result declaration. So we have found that also very attractive. In fact, the revenue growth was very strong in Q3 FY25. So looking after all these factors, I think Titan is well poised to show more upside from here. 3250 to 3300 are the immediate targets which we are attributing to this counter and recommending a hold.
Okay, a hold is what you're recommending for Titan as of now. Somil, good afternoon. And on the charts, Titan, what are we watching out for, right? Last 6 months, very muted performance is what we've seen coming in. So now what are we watching out for? Or rally is what we could see coming in?
I think since the start of 2024, the stock has been trending in a very broad range. The higher end is 3,900 and the lower end is around 3,000 levels. This stock has taken support multiple times around this lower end, which is 3,000 levels, and it has again started moving outside. It is already closing about 20 and 40 daily moving average. I think this is a positive sign for this stock, and this is the first time it is happening after a long time, as in after probably 2 or 3 weeks now. So it's a positive sign. I'll be expecting a short-term target of 33.50, and the stop loss would be around 3070.
Okay, so keep an eye on those levels over there for Titan. Let's move on to the next query for today. We have Jagrati Chauhan, who's writing to us from Chandigarh. She's holding 30 shares of Bajaj Auto. This is at a price of 4,500 rupees per share. So she's making a good amount of profits on this one, right? 7,500 around that level is what the stock is trading at. Wants to know if she should continue to stay invested in this one or book her profits. Bajaj Auto, what are they looking like in terms of fundamentals? Astha.
Yes, so first of all, want to give the recommendation, which is hold with the price target of 7,900. Now, talking about this counter, we have seen the results in the quarter gone by were not very attractive, and there were reasons behind it. The product mix was not good, and now they are focusing on the 125cc segment, which is a high margin segment for the company. So I think that can act as a cushion for this counter as of now. If I talk about the fundamentals, and our idea is, in fact, the domestic industry is also poised to grow 6 to 7% from here, which can again benefit this counter. So overall, because now I don't want to comment on exports, although management was very much optimistic in their con call regarding the exports, but right now, looking after the market condition, I think domestic market conditions are looking better than export. And in fact, their focus on high margin segment will definitely yield good results to them. So recommending a hold with a price target of 7,900.
Recommending a hold and a price target of 7,900 rupees is what you're saying. March sales numbers also were largely in line. Not much excitement, but they were in line with the street expectations. But Somil, on the charts and technicals, right, what are we watching out for in terms of Bajaj Auto? When you're looking at it for 2025, the stock is seeing cuts of almost 10 to 13%. YTD is what I'm looking at, underperformed its peers. So what can we watch out for? Do we expect, are you also expecting a run up now coming in, given that last 6-7 months we've seen a sharp correction?
This stock is struggling to go above 40 daily moving average, which is very negative for the stock. It's been last 6 months that it's been struggling to go above 40 daily moving average. There was only one time when it closed above 40 daily moving average, and since then it has been just going down, making low tops, low bottom, trading below all the averages. The momentum indicator on the higher time frame are on the sell side still. I think the lows which you've made around 7,100, it will be retested again, and I think my medium term target would be around 7,000 levels. On the higher side, the stop loss or the resistance would be around 7,790 and 8,090.
Okay. Keep an eye out over the levels over there for Bajaj Auto. Let's move on to the next query. This is coming from Mayank Srivastav, writing to us from New Delhi. He's holding 50 shares of Delhivery at a price of 300 rupees per share. He's a long-term investor and wants to know whether he should continue to hold or book out of this one. He's making some bit of a loss here. Astha, Delhivery, what is the view on the fundamentals? What are you watching out for here?
So I think with the recent acquisition of Ecom Express, I think this company is now well placed to cater the major market share in the 3PL segment. So I think that will really help the company, because I think if I include these both counters, that is Ecom Express as well as Delhivery, so they both collectively target around 97% of PIN codes in India. So again, a very strong point for Delhivery to show good performance going ahead. Maybe the performance, financial performance will show the results after 1 or 2 quarters, but we are quite optimistic on this counter. So I am recommending a hold on this counter. Immediate price target which I would like to give is around 270 to 280. Short-term targets or medium-term targets can be set at around those levels, but the long-term targets are around 300. Yes.
Okay. Long-term targets, 300 for Delhivery. So yes, keep an eye out on that. That's almost the buying price of the viewer. So yes, maybe sell at what you bought. But on the technicals, Somil, what are you watching out for? Do you expect that the view will be able to make above the 300 anytime in the medium to long term?
It doesn't look like it is. It's been taking resistance at 20 and 40 daily moving average every time it bounces back. Right now, it has made a small flag pattern. It has already broken down. The daily momentum indicator has given a fresh sell signal. I don't think so. Anything positive in the very short term. Short term, I'll be expecting a target of around 220, 210 probably. And on the higher side, the resistance, one single resistance, which will be very crucial, is 277. If it goes about 277, then probably things can change. But at the moment, sell on rise would be the strategy.
Okay. Sell on rise is the strategy for Delhivery, coming in from Somil as well. Next query for today, we have Nikhil Mehra, who's writing to us from Noida. 2,500 shares of IOB is what they're holding, and this is at a price of 50 rupees per share. Wants to know the long-term story on the stock. IOB as a bet, Astha, that's the one to hold on, or maybe look at some other banks. What's your view coming in for this one?
So I would like to prefer BOB over IOB, that is Bank of Baroda. I think in the public sector banking space, this bank is looking better in the stock performance wise if I compare it with the IOB. So there are two choices, either to exit from this counter and make a fresh entry into BOB, or to remain partially invested in this counter and make partial exit by investing in BOB. So this is what we are recommending right now. So partially exit and partially switch towards BOB.
Okay, and your view on IOB, Somil?
It's negative, definitely. My next target on this stock for in the medium term outlook would be around 29 levels. I would agree with Astha that the viewer should shift to BOB or probably Union Bank. Union Bank is a better bet. Federal Bank is also a good one. My suggestion would be to exit.
Okay, suggestion is to exit from IOB from both our experts for today. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll be taking more of your stock-related queries, so stay tuned in. Welcome back. You're watching Your Stocks on CNBC-TV18. Now, let's move on to the next query for today. This is on Indus Towers. We have Rahul Malhotra, who's writing to us from New Delhi. He's holding 80 shares of Indus Towers. It's at a price of 220 rupees per share. Wants to know the prospect of his holdings. And Astha, obviously, we have seen those recent developments come in for Vodafone Idea as well. And a lot of people are asking now on Indus Towers, so what should they now be doing with Indus Towers, and where do you see this headed from here on?
So Indus Towers is looking very, very strong to us. First of all, want to give buy as well as hold, both the recommendation for this counter, and we are setting the price target of around 410 at the initial level. Talking about the fundamentals of this counter, with the strong tower addition and the network expansion, I think this company has got very strong towers count now, and that will really help the company posting very good set of numbers going ahead. So this counter is one of the counter which we are recommending to our clients as well at this point of the time. Indus Tower is looking a good buying opportunity at current level. So recommending a hold as well as buy with a price target of 410.
Okay, keep an eye out. 410 is the target, is what Astha has mentioned. Somil, what are you keeping an eye out on in terms of targets for Indus Towers? Latest developments coming in there, positive signs coming in for the company as well?
Definitely positive in the short term and the medium term. It's trading above all the averages, above 200 daily moving average as well. Making high tops, high bottoms. So my targets on this stock would be around 412 for now in the medium term outlook. If it closes above 412, then probably it would go towards 500 levels, so 466 plus levels. But please keep a very strict stop loss around 336 in the medium term outlook for a positional call. 336 would be a very crucial support. If it breaks down, then it can give us very sharp declines because there is a small consolidation going on. If this consolidation breaks on the downside, then the next leg would be very sharp.
Okay, surely keeping an eye out on those levels over there for the stock. But let's move on to the next query now for today. This is coming actually two stocks that the viewer wants to know about, Dixon as well as Sagility. Munira Julu, who is writing to us from Tamil Nadu, she wants to know whether he should invest in Dixon Tech and Sagility. He's not got any investments as of now here. Long-term investor. Astha, your view coming in first on Dixon as well as Sagility on the fundamentals. What are you watching out for here? EMS players and specifically Dixon in the recent time has seen a bit of a fall coming in. Not much of excitement there in terms of the run-up that we've seen in the past few years, right? So what should one be doing with both these stocks? Should they look to invest?
For Sagility, I would like to suggest just wait for some more time. Now, the reason is we know that this company provides technology-enabled solutions to the US healthcare industry, and the kind of news flow is going on, the world markets are poised on. I think right now, I think it is not a good time to enter into this counter. Let this counter stabilize more, maybe at around the level of 35 to 33. We can see some sort of stability, and then one should make a fresh entry because I think news flow will definitely impact this counter going ahead also. So rather than investing at this moment of a time, better to invest at the lower levels of around 33 to 35. Now talking about Dixon Tech in any ways is looking good to us, and we are recommending because we are very much positive on the company's prospect, and we are recommending a hold on this counter. Initial price target is we are setting is at around 14,000 level, not a bigger targets we are giving for this counter, looking after the market conditions as of now.
Okay, and Somil, your view on both these stocks for the long term?
Dixon, I like Dixon. It is forming a ending diagonal pattern. It may consolidate in this area for some time between 12,000 and 13,500. However, this ending diagonal pattern, I think, will break out on the upside because the momentum indicator on the higher time frame has positive divergence, and I think on the upside I'll be at least targeting 15,700 and above that 17,600. So these are the levels I'll be looking out for. However, the stop loss should be around 12,000 levels.
Okay, keep an eye out on those levels over there for Dixon Technologies. Let's move on to the next query. Tata Tech. Now, Mohammed Ganesh, who's writing to us from Kerala. 20 shares of Tata Technologies, holding at a price of 1,000 rupees per share, wants to know the right time to exit the stock as well, right? Because right now he's making a loss here. And Tata Technologies, you know, this also is a query that's coming up a lot. It's not done anything since specifically after its IPO. So what should one be doing now with Tata Technologies, Astha, on the fundamentals? If they're making such a big loss, what should they watch out for?
So I think one can wait at least for some more time because in Q3 FY25 the performance was good result-wise, and now we are expecting that more momentum in the OEM space, especially in the automotive and aerospace. So that will help the company in coming months. So rather than making losses by exiting this counter, it's better to wait for some more time, let the results come in, and we are quite optimistic on that front as well. So recommending a hold with the price target at the initial level of around 720 to 730 odd levels.
Okay, and Tata Tech on the technicals, what's your view?
I think a very weak stock, never closed above 40 daily moving average, which is a very, very negative sign for the stock. Till the time it does not start making those high tops, high bottom above all the averages, which is 20 and 40, I think if the stock closes above 735, and probably that will be the time to buy into the stock. But at this point of time, my suggestion would be to exit or sell the stock.
Okay, let's move on to the next query. Bharat Forge, this is the stock that we'll talk about. Ashish Sen has written to us from New Delhi. 30 shares of Bharat Forge, price is 600 rupees per share. You know what he's talking about, and he's concerned about tariff issues coming into play, right? Trump tariffs, the impact on the auto sector. So what should he do now with Bharat Forge, and how should he play the story? Astha, your view first.
I think Bharat Forge is a good candidate to remain invested in for the price target of 1,050, 1,080. Now, talking about this counter, we are seeing that there is a good order intake in the defense sector that will help this company to show good performance in the coming quarters. So we are positive on this counter, and we are recommending a hold on this counter with a price target of 1,050 to 1,080 at the initial levels.
Okay, and Bharat Forge on the technicals, you know, what are you watching out for? Is there some worry because of these Trump tariffs? And does it make sense to just exit this one, maybe look at something else?
I think at this point of time, in the very, very short term, I'll be looking to buy this stock. for a small bounce till 1050 levels, but I think in the medium term outlook, it is looking negative because it's been making low top, slow bottom on the weekly charts as well. Momentum indicator on the higher degree is on the sell side. So if it goes above 1050 or 1100, I think that will be the time to buy. But at this point of time, in the medium term outlook, you can exit this stock and probably wait for a reversal sign or a close above crucial averages.
Okay, thank you so much for that view coming in there as well, Somil. But on that note, we'll wind down this edition of Your Stocks on CNBC TV18. So thank you so much, Somil, as well as Astha, for joining in with us. And thank you so much, viewers, for sending us your queries. But with that, we'll close this. And up next, you're closing well.